Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our Australian Rare Earths and Critical Minerals Conference. Our next presentation is from Dateline Resources. Please note you may submit questions for the presenter in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Steve Baghdadi. He's the Chief Executive Officer of Dateline Resources, which trades on the OTCQB venture market under the symbol DTREF and on the ASX under the symbol DTR. Welcome, Steve.
Thank you, John. Thanks for having me. And thank you for having a great product that allows companies like us, who are foreign companies, to be able to tell our story to the American audience. Really appreciate you. So a lot of the audience probably knows a fair bit about us, but there will be people in the audience that don't know anything about us. So I've structured this presentation as if most of the audience, or a lot of, there will be people that want to know the story from beginning to end, not just the bits that they don't know. So I'll start right at the very beginning. We are based in California. We're a gold and rare earth project. We're located 6 miles up the road from Mountain Pass. We're permitted, fully permitted, to get back into production. We've got a proven mineral resource of 1.1 million ounces of gold, and there's a clear pathway to profitability. That's us in a nutshell, and I'll get into more detail as we go along. The next 2 pages are our standard disclaimer page. Nothing new about this. Spend your time familiarizing yourself with it. That's what they are. Okay. When I look at a mining project, I always look for the 5 Ps, is what I call them. And they're the takeaways that I want you to leave with today. The first P is, are we in a known mineral province? P, province. Okay. And in our case, yes, we are. Down the road from us is a big rare earth mine. It's been mined for 65 years. And of course, the Colosseum is a known gold mine. So we're in a province where big discoveries have been found. The second P, which is very important, is really, I say it's power, but it really stands for infrastructure. And you need to have infrastructure nearby, otherwise your capital expenditure for getting a mine into production goes up. If you're 200 miles away from the nearest road, that's a big expense. If you have to fly your fuel in for power, that's a really big expense. So we are surrounded by infrastructure, and more importantly, infrastructure that has been used and continues to be used by mining operations in the neighbourhood. Permitting, very, very important. Not just in the USA, but anywhere in the world, but certainly in California. And we have all of our permitting in place. Is there a pathway to profitability? The 4th P, very important. And yes, in our case, there's 1.1 million ounces of gold, and there's a clear pathway to profitability. Now, the 5th P is very important also, potential for growth. So we have 5 Ps, province, power, permitting, pathway to profitability, and potential. They're the 5 Ps. Okay, a little bit of a corporate snapshot. And really, this is about showing how the OTC markets have exposed the company to the American investor base, and how that investor base has grown from only being 4.4% of the company in April to almost 40% now. And importantly, from my perspective, as a almost 12% shareholder in the company, I would like shareholders to know that my interests are very much aligned with yours, as is my chairman's, who owns about 15% of the company. So between us, we own almost 30%, say, or thereabouts. And every time we go to spend $1, we treat it like it's our own, because guess what? It is your money and our money, and that's the way that we approach it. And we're very cautious with it, and we want you to appreciate that, because we appreciate you as shareholders. Okay. There are 3 components to our business. At the Colosseum, there's the rare earth component, and it's clear to everybody now that we have to become independent of China. We have to be able to produce our own rare earths in the country. The West has dropped the ball on this one. and we're playing catch-up. We're a part of that process. We're a part of helping that catch-up process occur. The second part of our business is the gold mining. So we have a gold mine, and the gold mine can be broken up to two components. There's what's proven and the potential. So what's proven is going to give us short-term cash flow, and we're actively working at developing that gold mine and getting it operational. The third one is the Strontium deposit, and that is a pipeline project. We will do some work on that commencing next year. The uses are growing, and when we get into production, it will be the first US Strontium mine to get back into production in the US. Now, we talked a little bit about location. Location is one part of the story, and sure, location goes to the first P, province. We are located 6 miles up the road from Mountain Pass. That's a great thing. Okay, we know big rare earth deposit has been found here before, but I'll talk more about the structural controls in the next slide. Location is one part of it. We know that the government really wants this. They no longer want to import rare earths. They want to be independent of any other foreign country for rare earths. So we've got tremendous government support. We're in the right place and we're in the right time, and we've got a geological link to Mountain Pass. So in the next few slides, I'll go into the rare earth potential and why it's there and why we feel very encouraged pursuing the rare earth potential of the Coliseum project. Okay, this is a very important image. This proves that we are in the same structural control as Mountain Pass. So being close to Mountain Pass is nice. Being in the same structural control is fantastic. As you can see on that image, on the left-hand side, there are some darker looking rocks. They're younger rocks. And on the right-hand side, there's the lighter looking rocks. They're older rocks. The line that goes through the middle, as you can see that where the two meet, that's the Clark Mountain Fault. That's a structural control. That's a fault that has remained open for almost 1.4 billion years. Now, the Mountain Pass rare earth mine, they are mining their ore deposit right on that fault line, as you can see down there. And up at the Coliseum, the Brescia pipes have been found very close to that fault line. So there's no doubt in anybody's mind that that fault line is a major structural control. And although although being near is nice, like I said, being in the same structural control is fantastic. Now we've also got same rock types, same indicator minerals, same geophysical signatures, and those things have been confirmed by leading experts. Dr. Anthony Mariano and his son Tony, they've been out there, they've validated the data. The USGS has age dated the rocks and said that they are indistinguishable from the rocks down at Mountain Pass. Okay, so Dr. Mariano, he was the chief geologist at Mountain Pass for a long time, and he's a leading expert on rare earths. He was writing papers for the United Nations in 1980 on rare earths. So he's light years ahead of the pack. In the 70s, when he was the chief geologist at Mountain Pass, they did do some regional exploration. And he was the one that first alerted us to the fact that we had some rocks at the Coliseum that were genetic linked to Mountain Pass. Now, those rocks are what's called phenites. And phenites that have rare earths in them, like the ones at the Coliseum and Mountain Pass, usually get those rare earths from a carbonatite that has come from the magma and put the rare earths there. The Mountain Pass phenites are down the bottom. Dr. Mariano collected those in the 70s, and the Coliseum phenites are at the top. Dr. Mariano collected those in 2021. He exposed them to the same analysis technique, and he then got the images back as to what they are, and they show they are absolutely identical in terms of their reaction to the analysis. So, having established that we have the same phenites, and we are the same age, and we're part of the same system, we now have to look at the reality of the Coliseum. There's been a lot of mining up there. There's a lot of man-made disturbance. The geology, the natural geology is there, but it's not complete because it's covered in mine waste and tailings and so on. So we go out and we map the geology, and you can see the black squares, diamonds on the screen are the location of the phenites at surface. And we mapped them extensively, and there's more phenites there than what we originally thought. So we find that as another piece of evidence that gives us confidence to go to the next step. But what is the next step? The next step is to use the tools available to us to look subsurface, to try to figure out what's really going on. Now we know that carbonatites, rare earth-bearing carbonatites, are denser than normal country rock that don't have rare earths in them. So the image on the left is a gravity survey, and the hot pink spots are the really dense areas. There's a lot of hot pink spots, and on their own you probably wouldn't go and drill based on just those hot pink spots. Okay, you have to do a little bit more work. The image on the right is a magnetotelluric survey, and what you're looking for is a signature that is similar to the mountain pass signature, and then it correlates to a gravity signature in the same spot. And we've identified 3 targets here that have both a gravity high and a resistivity high that resembles the mountain pass deposit. Now, fortunately for us, Mountain Pass is a deposit that has been known for some 65 years. And there's a lot of work that's happened down at Mountain Pass, and a lot of that work has been published and is in the public domain. So what you're looking at here are 2 images. The image on the left is a plan view image, Colosseum at the top, Mountain Pass down the bottom, and you're looking at the magnetotelluric survey for both. You can see they're both about the same resistivity, and they're both about the same size. Now you're looking at that same image in cross-section on the right-hand side. You can see they go to about the same depth, about the same resistivity, and about the same size. So this is really encouraging for us, and these are all follow-up targets now, and we have the drill rigs on site to follow them up. This is just another way of looking at the data in cross-section in more detail. 2D on the left, 3D on the right. You can see that the structure goes down for quite a way. That's in meters. It's roughly 3,000 feet deep. It's still there at 3,000 feet. And like I said, the drill rigs are out on site at the moment, and we are testing these anomalies as we talk to you at the moment. And we expect to be finished that program probably by late December, early January. The assays are with the lab, will be with the lab. We already have assays with the lab. And those results will be coming in, and we'll make them available to you as soon as they come in and are modelled. I think we're at the end of the rare earth part of the presentation. And I just want to move on to some of the other stuff that we've got that we spoke about earlier. Okay, so now I'd like to talk about the gold part of the project. It can be broken down into 2 components. There's what we know is there and is going to lead us to profitability, and there's the potential. This will focus mostly initially on what we know is there. So this is an established gold resource, 650 drill holes, 100% owned, has been mined before, so there's going to be no surprises. We bought it in 2021. We applied some economics after we've drilled it out, and it looks fantastic using $2,200 gold. The gold price is significantly higher. I think it's over $4,000 an ounce right now. We plan to start constructing the gold mine in 2026, and that gives us the clear pathway to a profitable project. Now, we've talked a little bit about profitability. We've talked a lot about province. Okay, power or infrastructure is really important. Over here, we have used the power line at the back before when we were in operation. We've got access roads. We're not far away from a major city, which will make getting employees to come and work for us easy. They will be able to go home at night and see their families, which is very important. There are, again, no surprises. The power is there. It's not far away. We've tapped into it before. We're allowed to use it, and there's no surprises. And this is very real. This is not something that we have to provision for to come in 18 months' time. This is at our doorstep right now. Okay, so a little bit of history on the Colosseum. What you're looking at there in the image is the south pit and the north pit, the pipes, as they stood before mining. So the geologists would have walked up to those, would have seen those, and like all good mining companies, they would have gone for what was obvious and at surface, which is exactly what happened down at the Mountain Pass mine that carbonatite, the rare earth bearing carbonatite, was at surface. So there's nothing to look for. They walked up to it, it was visible. Same with these two pipes here at the Colosseum. They outcropped, and the normal course of action for mining companies is that you drill to the point where you can justify the capital expenditure to get a mining operation going. So that's what they did. They drilled those two pipes, those two pits, and they proved up 700,000 ounces of gold, which then justified building a mine. They did that. And normally out of the cash flow, you would then go look for more gold. But in this case, the company struggled because the gold price was low. They did produce 350 or 344,000 ounces of gold in that period. And then when the gold price went down to $300, they just suspended operations, which is actually the right thing to do, because you don't want to be selling your gold at no profit because it doesn't replenish itself and you only get one go to really make a lot of money out of it. You normally would wait for a higher gold price, which is exactly what has happened in this situation. We have come into it, the gold price at a high, let's get it back into production and start making real money out of it. Now, from the time that the operation was suspended until we bought it in 2021, no work was done, not a thing. Okay, but we got in there and we took the resource up to 1.1 million ounces of gold from what was left from the previous mining operation. Like I said, the scoping study, very conservative, using much lower gold price, showed that the project was viable. And now we are well and truly advanced on our feasibility study, and it should be finished by quarter one of next year. And some of those long lead items, like the ball mills and your SAG mills and so on, they're already being sourced, and negotiations are afoot to put deposits down to start the process of getting them over so that the project will not be held up. So there's many things happening at the same time to ensure that we hit our goals. Okay, we've talked about province, we've talked about profitability. Okay, now we're going to talk a little bit about, we talked about power, now we're going to talk a little bit about permits. Very, very important. In the case of the Colosseum, we're not waiting for permits. We have the permits. We're just doing the feasibility study and then we're going straight into construction. Our permits have been acknowledged at the highest levels, the Secretary of the Department of the Interior, the Bureau of Land Management, the National Park Service. Everybody has acknowledged our right to be there and to mine. At the local level, San Bernardino County has also acknowledged our vested mining rights. And just at the moment, I think we're at the right place, at the right time, with the right conditions, and we're completely aligned with US policy to really play catch-up and get mining going again in the USA. Okay, a little bit about the economics of the gold project. So clearly, when we designed the mine, we used $2,200 gold for the pit shell. Okay, and with that, we came up with 635,000 ounces of gold that we could produce at a profit using $2,200 gold. We then applied $2,900 gold for the income stream to work out what our net present value is, and we came up with $550 million. That's a 61% internal rate of return pre-tax and a fairly low operating cost. So we're not overly sensitive to change in the cost. But the nice thing about what's happening to the gold price at the moment is not going up because of inflation, it's going up because of demand. And that just means that all of that extra price for the gold that we're able to get goes to our bottom line. I think our margins at the moment are not quite twice where we started, but almost twice where we started when we first were doing this study. And of course, there is significant upside potential to the deposit with the extra areas that we've identified as worth drilling out and adding to the resource that we already have. Regarding the upside, we've talked a lot about the rare earths and the upside and going after those. We're fortunate that we sit in that same structural corridor and as Mountain Pass for the rare earths. But on the gold, we've identified 3 high priority targets that are worth going after out of 6. And target number 1 is currently being drilled, and we'll drill the other 2 targets in due course as we progress the drilling program. But this gives us real upside potential. So we've talked about province, takeaway 1, power, permits, profitability, and potential. They're the 5 takeaways that I want you to leave with today. And we've got all 5 of them here. In terms of the drilling, we've finished the feasibility study drilling. That went pretty well. We made a release on some of the findings so far, some of the results we got back, and there's more. There is a bottleneck at the moment at the labs, which I'll talk about next slide. It's beyond our control. We're busy drilling and nothing's getting in our way, but the labs are processing as fast as they can. We're now drilling for extensions of pipes at depth, and we're looking at these new pressure pipe targets, target number 1, as I said earlier. Okay, the results that we've released on the 2 holes that we've got back are very encouraging. They're in line with our expectations. It's roughly 280 foot intersection. I'm going to switch between metric and imperial, but it's 1.33 grams per tonne, or I like to think of it in dollar terms, it's about $180 per tonne US. So this is in line with the resource, and we're not surprised by these grades, but it does enable us to lift some of the inferred resource into the measured and indicated category, which would improve the feasibility study and the project economics, hopefully, as we progress through that study. And of course, as I was saying, alluding to with the labs, at the moment, with the price of gold where it is, everybody is drilling. The labs are inundated, and the results coming back from the labs are the bottleneck at the moment. Okay, the Strontium mine. Like I said, the deposit, should I say. This is a very high-grade strontium deposit with very few impurities, like almost non-existent. It was last operated in the 50s by the DuPont family. Strontium is already a critical mineral in Europe. It's not so much, it's not in the US, but we think it's going there. The uses are growing, both in terms of niche uses and broad-based uses. The niche uses are electronics and some defense systems, etc. The broad-based ones are gamma-ray fighting qualities in concrete. Helps to dry the concrete faster, makes it stronger, and has gamma-ray deflection qualities. But as with the Colosseum, we chose this project. Part of the reason of making a decision was ensuring that we were close to infrastructure. As you can see, we've got power, we've got gas, we've got an interstate highway, we've got freight rail. So we're quite disciplined in our approach. We want those things to be there because we think in the long term, when you actually go to develop the project like this, you have to think about these things in advance, and you have to make sure they're not going to cost you a lot of money to get a project into production, because lots of projects fall over because they don't have the right infrastructure around them. And certainly our projects have the right infrastructure. Okay, so upcoming milestones and catalysts. Well, we've got active drilling program. We've got 3 rigs on site. We're drilling for rare earths. We're drilling for gold. And those results we made available as soon as we get them. We're completing the feasibility study and then heading towards construction of a mine. And once we start construction, obviously it will get into production. That underpins all of our growth from that point onwards. The company will be self-funded. It no longer has to rely on its own capital to progress things. And of course, we'll all be much happier when that happens. So again, I know I sound like a broken record here, but 5 takeaways. Whether you invest in Dateline, are an investor in Dateline, or even looking to invest in other mining companies, okay, you remember, province, are you in a known province? Where we are, there's rare earths and there's gold. We know that. Permitting. Is the permitting in place? Well, we have that. That's really important with any project. Power, meaning infrastructure. Well, you've seen it. We've got power lines, we've got roads, we've got water. It's all there. And it supports mining. That's the important thing. Is it big enough to support mining? Is there a pathway to profitability? For me, that's really important. And in our case, we have already, in the bank, so to speak, 1.1 million ounces of gold where the plans are demonstrating that this is going to be highly profitable. And then is there potential for upside? What is the exploration potential? And if I get ticks to all those 5 Ps, I normally invest. And certainly with Dateline, we have all of those 5 Ps. Thank you very much for joining us today. I've enjoyed presenting our company to you. I can see there has been some questions submitted. We'll try to get onto those in the next day or 2. There's also a book a meeting at the top of your screen, which you can choose. And certainly we can schedule meetings for anybody that would like to do so.